US stock markets started correcting lower since last Friday, with a bearish movement becoming more clear and intense since yesterday. Today we are to focus mainly on fundamental issues that could affect US stock markets, including the Fed's stance, the attack of Iran, as well as recent and upcoming US financial data. For a rounder view, conclude the report with a technical analysis of US 100's daily chart. We note Fed Chairman Powell's speech on Monday, at which he pushed back against the market's extensive dovish expectations. Fed Fund Futures implies a high possibility of the bank cutting rates by a total of 75 basis points until the end of the year, an expectation that implies a 50 basis points rate cut in one of the coming meetings. The content and tone of Powell's speech showed the hesitation of the bank to cut rates extensively, and should it be followed by Fed policymakers in statements that are planned throughout the week, could weigh on US stock markets as the easing of financial conditions in the US economy may be slower than initially expected. As for financial releases, we note that the US ISM manufacturing PMI figure for September came in lower than expected yesterday, showing a wider contraction of economic activity in the US manufacturing sector, weighing on US stock markets, and should also the ISM non-manufacturing PMI figure for September retreat on Thursday, we may see it having a similar effect. Next big test for US equities prices is expected to be the release of the US employment report for September on Friday. Should the actual rates and figures meet their respective forecasts, the market may perceive the release as indicative of a cooling US employment market, thus may support US stock markets. As we talk about the US employment market, we cannot pass the recent strikes in the US East Coast harbors unnoticed. The strikes may not have weighed on US stock markets yet, but are a potential risk for the US economy, and should they drag on, they may weigh on US stock markets. Iran's retaliation attack on Israel may have been the main factor behind Tuesday's bearish movement in US stock markets. Despite the size of the Iranian attack, we view it as moderated, which in turn could be signaling a possible easing of the escalation. Yet Israel is expected now to strike back, and the question looms how hard it will strike back. Given that the degree of uncertainty and the stakes are high, we may see the market being very sensitive for the issue. Should we see further escalation and the chances of a conflict evolving into a regional war, we may see the issue weighing further on US equities, while a possible thawing of the tensions could provide a more optimistic outlook and support US stock markets. Nasdaq has been dropping lower after failing to clearly break the 20,100 resistance line. It should be noted that the drop of the index's price action on Friday has broken the upwards trend line guiding the index since the 6th of September, in a first signal that the upwards movement of the index has been interrupted. We also note that the RSI indicator has retreated nearing the reading of 50, which could imply that the bullish sentiment among market participants for the index is fading away. Yet the RSI indicator has still to break below the reading of 50 to start signaling a possible build-up of a bearish sentiment for the index. Hence, for the time being, we expect the index to stabilize somewhat, switching last week's bullish outlook in favor of a sideways movement bias initially, until the market decides on the direction of the index's next leg. For a bearish outlook, we would require the index to break the 19,470 support line, thus paving the way for the 18,720 support level. On the flip side, for a bullish outlook, we would require the index's price action to mark a higher peak than the one last Thursday, thus it would have to break the 20,100 resistance line and aim, if not reach, the 20,800 resistance base. Those were the top financial stories for this hour. From all of us here at Iron